Today's Consumer Price Index report shows that inflation isn't letting up just yet. In January, CPI rose 0.5% from the previous month, following a 0.4% increase in December. Over the past year, prices have climbed 3%, slightly above the expected 2.9%. Meanwhile, core CPI, which excludes food and energy, saw a 0.4% monthly increase and a 3.3% annual rise, both higher than forecasts. These numbers suggest that inflation is still sticking around, which could delay any potential interest rate cuts from the Federal Reserve. So what's driving inflation? First, you have higher producer prices at the start of the year. Secondly, minimum wage increases in 21 states. And third, you had the avian flu outbreak, which has pushed egg prices up significantly. Food prices saw a big jump. Meats, poultry, fish, and eggs rose an overall 1.9%. In January, egg prices alone shot up 15.2%, marking the biggest spike since 2015. The energy sector also felt the impact, with a 1.1% increase in January, largely due to a 1.8% rise in gas prices. Meanwhile, shelter costs, which make up nearly 30% of the CPI index, increased by 0.4%. With inflation still running higher than the Fed's 2% target, further rate hikes could remain on the table. Financial markets have taken notice, stock futures and metals have dropped, while treasury yields and the dollar index have moved higher. Many economists believe that as long as inflation remains this persistent, the Fed is unlikely to ease rates anytime soon. We expect interest rates to open up higher today than yesterday.